shove the other in the bag with the rerun shows and the cocaine nose job, the daytime crap of the folk singer slob. You need cooling, baby, I'm not fooling. I'm gonna send yeah back to schooling, way down inside. Honey, you need it. I'm gonna give you my love. I'm gonna give you my love. Oh, want a whole lot of love. 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 You've been learning, baby, I've been learning. All that.
All right, let's get after it. All right, so if you're in the boot camp, make sure that you spend this time. If you're in the phase 1 of live price and historical data, backtesting that, learning that, using the simulators to do that. Next week, I will start going over the questions and get these other simulators unlocked. Why are they not unlocking? Who knows? There they are. So I'll go over the line versus the apex, the candle science, daily classification, 4 steps, and all that good stuff, so we can get that live and automated for your use. If you're in the phase 2, which is the quantitative definitions and understandings of how to stay profitable, whether you're a systematic trader or a discretionary trader, right, who manually presses the buttons every time. Like, these are important definitions to know when you need to adjust the different levers. If you're in phase 3, make sure that you're sticking with the plan and you're going through, you're learning this stuff, you're learning how to understand when to turn the system on and off, you're understanding when it's appropriate to position size lower and higher, you're understanding when it is acceptable for portfolio cycling, and use the MFV analysis tool that allows you to test that. 1 minute. Oh yeah, right here. Like, so when you compare, right, you can compare it. You can study different moves. You can learn the different types of portfolio cycling off of the different types of moves and which ones would be better. So if we just take the 1800 over the last 100 days, we can see that would have been with 5 accounts, right? Wouldn't have been all that great. If you did it with a portfolio cycling like such, you could see that it gets a little bit better, and then such it gets even better, right? And knowing how to turn the stuff on and off, right? All right, so you got your homework assignment for the weekend. I know a lot of you guys knock out most of your work on the weekends because you're working real jobs or you're dealing with families. That's why we made the boot camp self-paced and, automated, so you can just do it when it's convenient for you. All right, so let's get into re-engineering. So this morning during the war game, we knew that we were looking for a reversal, right? We knew what we were expecting. We knew the biggest thing that we had to solve was, let me log in, the daily profile, right? We knew that Asia was long, false, broken. We see that London was long, true, none. We knew that London was the highest probable statistic to retrace to go to before starting to look for a bounce. And then we knew that we were looking for a short, false, right? And we know the 4 steps to identify a true over a false. All that good stuff, right? We know the 4-step reversal for the false. We know the 4 steps that we look for the true. We taught it to you in the boot camp, and we go over it every day. We needed to define, though, right? The first problem we had to solve for the false was it going to make it, was the current low of the day the low of the day, or did it have to make one at 9:30 to 9:45? Things that supported that was, the 12-hour MFV told us to expect a new low of the day, and a new major pivot between 9:30 and 9:45. Then the second problem we had to solve for was, were we going to get a morning high of the day or an afternoon high of the day? Those are the two problems we had to solve for, right? So let's go forth and conquer, right? For a short false, we knew that the low of the day zone looked like this. No. We knew that this was the low of the day zone, and the high of the day zone was up in here. And we put 9:30 to 10:30 because if you look back at the data, we had to be able to tell if we were going to make an early morning high of the day and then range the rest of the day, or were we going to make an end of day high of day, right? Any questions about the war game this morning before we keep going? Yes, no, maybe so. Pretty cut and clear. All right, good stuff. So now we know what we were looking for. And so let's go read the live price. Fast forward to 9:30. Damn it. Gonna strip the lights on so we can get our targets and align them. Now 9:30 opens up all the way up here, right? We know we've already breached our 70th percentile zone for the MFB from 7:30 to 8:30. We can delete that. We know that we've already hit our high probable settlement in Globex. We can delete that. Right, the only thing we have to look for below us is London OU or new low of the day, and then reverse, right? But because it's making this kind of movement, type in the chat, like, which one you're betting on at this point. And you got to still wait for 9:30 to confirm it, but before the market opens up, right, which pill are you expecting to play through based off of the way 9 to 9:29 went? Low of the day set in, but which pill, the green pill or the red pill? Not the red pill. The red pill means we need to make a new low and then recover. Look at the momentum. We're above the 10 basis points. We got two strong 15-minute candles before the open. We're thinking green pill. So if it wants to go with green pill, we know that market open should rip right out the gate. If it's going to go with the red pill, then we're going to get, and that should give us a DWP signature. If we go with the red pill, right, new low of the day, and we're going to have that spike in action happen around the 9:30. All right, so now we're going to press play. 9:30 opens up, and we drop, right? We're going to wait for a couple closes, unless you're a really good trader, and then you probably take the sell, right? So right there, this is confirming that we need to make a new low, a major pivot low, and we're not going to go with the green pill. The fact that in less than 5 minutes, we recovered that whole pre-market move, right? We got London OU touched, right? All right, and 5 minute opens up, so we can put our zones on, right? If we want to go down here to our 20th to 30th percent zone, right, we'll make these annoying blue. We're going to sink it in the layout. We know that this is a probability to the downside if we can start getting 1 minute closes outside. And that's right where new low of the day is. We know the 40th to 50th percent zone is this bright green box right here. And then if we take sells and it's a true day, we can target the lower portion, which is right here, right? So we can see that these are zones of interest for any sells that we might take, right? We want to look for pivots and reversals. We've seen it all week where we like to touch the lower probable zone. and then respond and go to the other side of the 930 range to hit the median 50%, right? So we've been watching it all week. And so now we know that if we're going to take sells out of this, hey, thank you. So we know that this is our point of interest, and that just magically lines up with the P12 low, suggesting that we need a new low before we go higher, right? Helping us solve that problem just a little bit, right? But to do that, we need to start closing below the 930 again. Right now, this can reverse right here. If you look right here, this was the first 5-minute candle. We're still within the first 5-minute candle of the 930 to 945. And we know that we have to pay attention. This could just be a 5-minute retracement, or we're going to start bursting out the top. And that's the true signal to start engaging with longs for a new high of week, new high of day. And we couldn't do that. As a matter of fact, that 5-minute candle ended bearish. Actually, it was this 5-minute from 930 to 934, right? We went lower. 935 to 939 was an inside bar. We swiped this one in and hit the mid of that 5-minute. It's important to pay attention to, right? We come down to this blue zone, which on the gunship, we see the importance of that is this is the 20th to 30th percentile, right? So if you're taking any shorts, you've got more than enough opportunity to cover your queen, right? Where do we typically cover our queen at? Heck yeah. 10 basis points off of entry or off of breakout. That's depending on your playbook, but for me, it's off of entry, right? I'm not a breakout kind of entry kind of guy unless I'm like chasing a move, right? And then it's 10 basis points off of entry, right? So we got plenty of opportunity if you took the sells. I did not. I was trading with the devs this morning. I was targeting longs, so I was targeting longs, and they can tell you I got covered the queen, stopped out, covered the queen, stopped out, and then it finally moved, right? 945 opens up, right? We go to the lower 50%. So now we're paying attention to what price wants to do here. Does it want to reverse? If you're in the sells, right? This should be your cash flow target for your any partials that you are taking, right? And then runners will go to the lower level, preferably down here where the frequency is a little bit brighter green. And yeah, but we know that the probability of a false is more than a true. However, we just breached the 40 basis points off of 6.9. We're blowing through the low of the day zone, and we're failing to do a 4-step reversal. So we've got the true scenario playing out. So honestly, it can go either way, right? The 945 opens up, and we start sucking back into the range, right? This is like pretty cool how we can see who's damning me. Dell Gordon. Oh, cool. Yeah, send it here, Dell. Like, DM it to me. I didn't realize you changed your profile picture. Nice. So now, this is the importance of understanding these levels. And I'm going to get Austin to take these conditional MAEs where you can shade them off if you don't use them. These are just pullback probabilities after you get a 5-minute close outside of the 930 to 935, right? So you know that this is a 90% probability where the blue line is, and this it gets lower and lower and lower, right? But now we're paying attention, right? Does it want to, we made our new low of the day, right? Right here, 1-minute candle, 1-minute candle made a new low of the day. And then what was the action that the market did? What was the action that the market did? That told us that the false could still be in play. It sucked back into the range. Thank you, J Bell. J Bell's my favorite student. He's been here a week and he already knows how I communicate. Let me. Everybody's gonna be butthurt because I think I have favorites. I only have favorite dogs. I hate all people equally. So, like, that's the importance of understanding where you are within the 1-minute and the 5-minute structure and where you are from a probability standpoint, right? If it's really going to go, right, it needs to start picking up and boogieing, right? So now, right, 10 o'clock opens up. And if we start breaching out of the 930, then our targets are going to be up here and up here and up here, right? Because we might not get this at 1800, 03, magic hour, lunch break, Q1 break, 1400. But the one thing we can like really put our money on is 930. Majority of the times are going to hit this bright green frequency or this bright green. That's why we cover our queen. So if we get the direction wrong the first time, it's a risk-free trade, and we can target up here and make up for any losses, right? So let's move on. 10 o'clock opens up. Where's our probability flags at for candle signs? I'm going to delete this now because we don't need this anymore. This is our candle science extreme right here, I believe. Yep, we're going to delete that. So where's our probability flags for the 1 and the 3 hour? And is the 3 hour in a C2 state or a C1 state or a C3 state? Red represents the 1 hour probability flag for where the probabilities will be when then by 11 o'clock. The pink is for the 3 hour where the probabilities are guiding you for the 12 o'clock. The 3 hour is in a C2 state because it took out the previous 3 hour low right here. The 1 hour is in a C3 state. So we know that this opening price matters right here, right? All right, we open up and we breach that opening. So the hour probability flag now flips up. 3 hours still down, but if we break this, right, then we know that 3 hour probability flag flips up too, right? Because technically you didn't get an apex alert in hour 1 and blah, blah, blah. It would be a line signature up anyway. You continue up. All right, you take out the 10 o'clock high, right? 3 hour probability flag flips up. For 15 or for 12 o'clock to take out this high, right? And you know that both are now in a C2 state. So when a candle, whether it's the hour, the 3 hour, the 45 minute, the 5 minute, the 10 minute, the 15 minute, the 1 minute, whatever, right? Once it's in a C2 state for the hour, we know that the current opening price matters, but because the first 2 quarters can touch it a million times, what live price element do we use to kind of guide it? Quarters. And for the 3 hour, what live price, once it's in a C2 state, do we use to guide it? Line versus Apex. Actually, Christian is my all-time favorite student, period. No ifs, ands, or buts. Like, that dude's going to be such a quantitative trader. I guarantee he's not. Do you trade manually or algo, Christian? Mostly, I knew it. I don't even need to see you trade or talk to you. I know how you communicate, whether you're an algo base or if you're a manual base. That's dope. I agree. Right? All right. So we know that 3 hour line signature up, quarters we're going to wait for, and that it's up as of right now because we're above the opening for the hour. All right. Q2 opens up, right? We know that this is the low that matters. Are we going to get, if Q2 takes out the high, we're going to be expecting Q1 low, Q4 high. If we get an apex signature downwards and this is a sweeper, which do we think this is a sweeper? Let's check. Now I got to quit showing that off because I can't share it with you guys. But we're going to be paying attention to the previous hour 50% and this quarterly low. They just magically line up together, right? Q2 takes out the high, so we're expecting Q1 low, Q4 high, right? And then we're going to be paying attention to the quarterly lows to make sure they don't get breached for apex alert. So right now, new 15-minute opens up. We know that the low that matters for the apex alert is this low now, Q2's low. He is a bot. A competitor? I don't think competition, dude. Listen, we got plenty of algos firing in the background, and listen, I will never be the guy that gives two craps about how you trade, because I know whether you trade algo based, whether you trade manually, right? I just know it all comes. The algo trader like removes a lot of human slippage, a human error, right? But they still have to have discipline to turn on the system and turn off the system and not manipulate the system while it's in a trade, and understand that the consecutive loss period is what it is and properly position size. Like, at the end of the day, like, as long as you're sticking to your business plan and your trade plan, I'm telling you, like, if we look at a typical trader in the next 2 years to 5 years, I don't think it looks the same, right? Do you know how long it takes? Look, let me show you something. It would take too long to upload. But I have 18 different algos right here, right now. Do you know how long it took me to build those? No, it's actually probably more than that. It took me a weekend to include the dashboard that builds it, right? I think in the next couple of years, like, the manual people open up to, hey, like, I keep screwing myself and not trusting the system. And I think that traders will advance and remove a lot of the human slippage that they keep experiencing. Now, what's going to separate people is the data that they run their systems off of. Are they using 20 years of data, which we know that market environments and volatility conditions, why don't we want to train targets and stop losses and all that off of 20-year data? Because market environments and volatility conditions shift and change and rotate, and regimens shift and change and rotate. The people who will successfully be able to do algo-based trading are just like the manual-based traders, right? Like, the human mind, once trained, you don't realize how complex you are to be able to say, hey, we're at the value area low. Do I see the elephant step in the room? I'm going to place my stop here. I'm noticing all these different things. Or, hey, I just saw a breaker happen on the 15-minute, blah, blah, blah. Like, you guys think algos are more advanced than the human brain, but the human brain is more advanced when it takes in information and it makes decisions. Now, where algo thrives is it does not break its rules. It does not over-position size. It does not trade off of emotions, right? But I promise you, like, you as a human, you've got way more input. How many of you guys have scrolled Twitter before and it impacted the decisions that you would make in your trades? That's a form of input data coming in and output decision making coming out, right? Most people don't understand that, right? So, like, your brain is way more powerful than any AI, any computer as of right now. All right, so, like, your job is to decide, am I too undisciplined? Do I keep seeing the edge, but I keep stepping on myself? Then maybe you should learn how to be an algo-based trader. Or I have discipline and I like having the ability to take all these things and make decisions off of, then you need to stay manual. And I have the discipline not to screw myself, right? All right, so we know that this is a Q2 low that we're looking for. And so now we have an apex alert, right? What daily classification signature did we get between 9:30 and 9:45? And what two daily classifications are we expecting anyway? Are we expecting DWP in range 2? No. Which ones are we expecting and why? Did we get the 9:45 reversal that I always speak of? Yes. Literally at 9:45. Right? We know that this is the signatures of a DNP in a range 1. This is just confirmation of that range 1. Right here, right now. It happened at 10:41. Up until 1041, it could have easily been a DMP day. Right? All right, moving on. Apex alert, so we know the hour probability flag is down. We know the 3-hour probability flag is down. And then that apex alert got canceled right here. The moment we take out Q3 high, it gets wiped out, right? Because are we going to close this hour up green or red? Green. So where's our hour probability flag? Continuation, up. Your 3 hours still up. All right, 11 o'clock opens up. There's your 3-hour line. As of right now, this goes over here. So at 12 o'clock, your 1-hour probability flag is up and your 3-hour probability flag is up. It's only 11, right? You're going to guide it with quarters in the line aspect, right? All right, so this quarter opens up, right? You get a false 05 break, or you get an 05 breakout. You're at the 10 basis point right now of that 05 box. Take out the high, so you're expecting Q1 high, Q4 low. If we breach this low, then we're expecting an hourly doji. Well, that makes sense in the range one day. And then you start breaching to the upside. Okay, but ultimately, your brain is thinking Q1 low, Q4 high, until proven otherwise. All right, Q3 opens up. You know the low that matters is Q2's low, right here for a doji alert. And you get the doji alert right here. When I say doji, I mean more wick than body, not a hammer or I don't know what you guys call it, right? Like a hammer or I don't know. I give up. All right. Return back to the 930. And then right here is your, you didn't get an hourly doji. You got this much wick, so you still got more body, but over time, majority of the time when you see that signature, it's going to represent an hourly doji, right? All right, 12 o'clock's opening up. What are the 3 line signatures that we're looking for within the first 15 minutes? We know we get a new 3-hour here. We know that we're right at the previous 3-hour open, right? Perfect 3-hour line, first 5 minute, false 05. You take the 12 o'clock low or the previous hour low by a tick, and you start busting out to the upside, right? Another signature over range 1. Q2 takes out Q1's high, expecting Q1 low, Q4 high, right? Which 3-hour signature did we get here? Yep. We got the perfect line, right? We know that Q2's took out though, so this low matters, right? Q3, now this low matters, right here. You know you're in a range 1, so your quarterly expectations are like lower than normal because you know on a range 1, quarters break a lot more than they do on a DWP or any kind of those style days. You still got to expect Q1 low, Q4 high. All right, Q3 opens, Q4 opens up. Now you know that this line, this low, is the one that matters. There's your Q1 low, and I don't know, you got, there's your Q4 high, right? You know, 3-hour line up for 1500, even though it's 1400, and 15, your 1 hour for 1400 is up. Now you're paying attention to which side do we break out of New York 2. All right, you break out to the long side, you come back to your data. You know, you broke this, I believe you broke New York. Yep, you broke everything. So this is broken. You break out to the long side of the afternoon, right? So you can see there's a 65% probability of true. There's a 34% probability of a false. All right, so you can see that 34% of false. You can see it's either going to go false at 1400 or end of day, 1600 to 1630. Where's the major pivot at? Right, for the false, it's going to be around 1330 or 1400. Either one of those highs can be your major pivot, chop, 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 and then guide lower, right? But that's not the higher probable trade. The higher probable trade is continuation upwards. But look at all the deep pullbacks and the chops that you're seeing, right? This is 1500. The market doesn't start moving until 1500, and you're expecting to get caught in an afternoon range. So you know what you're looking for around 1300 to 1400 for that major pivot false. Inside 15, so now you can expect both sides to get ran for Q2. You're in a 3-hour line signature up. Your hour and your 3-hour probability flags are up. You wipe the lows of the previous 15-minute. You're seeing, can it attack this 15-minute midpoint with speed? Can't do it, it fails. Can't do it, it fails. Now a new quarter opens up, and you got a nice little doji candle. Rejection of that 15-minute inside bar a billion gazillion times. Right? And since it's the second hour, do we have an apex signature to the downside? Yes, we do. 1 hour is down, right? Why? Right? Q3 and Q4 kept taking the low. Nothing broke out of quarter Q1 though. So I'd be very hesitant to ride that as an apex. But it is what it is. Rules be rules. All right, our probability flag shifts down. 3 hours still down because of the apex. Take out the low, suck back into the range, right? Take out the low, now you're expecting Q1 high, Q4 low, back to 930. Using quarters to guide the hour probability flag. And then right here, right there, that tells you to expect the true. Why do we expect the true right there? Because we didn't get follow through to the downside during the time we were supposed to put the major pivot in for the afternoon, right? This looks more like this malarkey than this malarkey, right? Look how the move we should have been violently selling off around 1400, 14 to 1415. We didn't do any of that. We did more of this tight base range trading. So what can we expect? 1500 to go up. And that is your engineering for the day. And we didn't. So maybe it will go false, and that false happens at 1600. What are your correct questions? How did everybody do this week in the boot camp? Did you guys read? How was your boot camp experience? How was reading price? How was trading price? Give me one aha that you learned this week, no matter what week you are in the boot camp. You made $10 million this week. Cool, dude. 930 to 945 box aha. Nice. The 10 a.m. 15 break probability 86% true. Yep. I woke up 4 out of 5 days at 4:45. That's your aha. That you can wake up early in the morning and study. And it actually turns out to be okay. Your brain operates and your body operates the most in the morning when you wake up. Look at this. That's never mind. Hourly quarters, cool. Collecting the MA, MFE daily. Will you be placing all the current samples in sample or switching between out of sample? So for me, I just always have a rolling 100. And then if I need to compare based off of something not looking right, I have the out of sample to go off of. And the way I collect out of sample is I do a bull market that's strong, a bear market that's weak, and then a high volatility state. And then I make my decisions on where's my cash flow targets going to be, where's my cover the queen going to be, how much position size I'm going to be using off of that. Never listen to Trump tweets? No, never. All right. With that being said, that concludes it. You guys have a great weekend. And yeah, I saw how to mix in those 25th and 50th percentiles with live price to help the reversal levels. And yep, absolutely. All right, ladies and gentlemen, have a great weekend. Bye.